In today's session, we will be discussing the preparation of the balance sheet. So far we have learned how to prepare trading account, profit and loss account. The final statement that we are preparing as a part of final accounts is the balance sheet. And today's session, we will be learning the preparation of balance sheet. So balance sheet, to start off with, please remember balance sheet is the last statement that is prepared as a part of your final accounts. So final accounts, the process of preparation of final accounts, it starts all the way from trial balance, then you prepare your trading account, then you prepare your profit and loss account, and then finally you conclude with the preparation of balance sheet. Now, balance sheet is prepared in order to understand the financial position of the firm. Okay, balance sheet is prepared in order to evaluate the financial position of the firm. What is meant by financial position? Financial position is a comparison of a company's assets with its liabilities. How much of assets does a company have? How much of liabilities does a company have? For us to understand the concept of financial position better, we must understand we must think about the definition of assets and liabilities once again. Okay, so what are assets? Assets are resources. Okay, what are assets? Assets are resources. They are resources that are needed by the business. Then what are liabilities? Liabilities are obligations of a business. They are payments that the business has to fulfill. Okay, they are payments, or they are basically payments that has to be carried out by the business. So the comparison of how much of resources a company has versus how much of obligation a business has, that is called as the financial position of a firm. Now moving on, balance sheet is prepared with with the help of picking up the how much of assets a business has, how much of liabilities a business has. Also, while we are preparing the balance sheet, please remember we are doing a validation of the accounting equation. We are trying to see is the please remember the accounting equation. Accounting equation tells us that liability plus capital is equal to assets. So when we had previously learned the accounting equation, we know that accounting equation tells us that the sum total of liability with capital in a business must be equal to the assets. So accounting equation, when we had learned the accounting equation previously, we know that in any firm, okay, and we also know that this is one of the fundamental equations of a firm. Okay, we learned that this is one of the fundamental concepts that we would be dealing as a part of the accounting subject. So accounting equation tells us that liability plus capital is equal to assets. Okay, so this is what we have learned as a part of our accounting equation. Now, we are trying to carry out a validation of this itself when we prepare while preparing the balance sheet. We are validating this equation once again when we are preparing the balance sheet. So this is the reason why usually accounting teachers keep insisting on students, telling them that while preparing balance sheet, asset side must be equal to the liability side. Okay, that's the reason why some of you, if you have already studied accounts, you already have an understanding about what accounts is. Your teachers would have earlier, they kept on insisting, telling you that the asset side must tally with the liability side. But why is that so? The reason that why they would insist on that part is because they are trying to validate the accounting equation. An accounting equation is a fundamental, or it is a universal rule. So it has to hold good, and that's the reason why balance sheet is prepared. And while preparing balance sheet, asset must be equal to liabilities. Okay, so moving forward, now we will be discussing the format of the balance sheet. Now, there are different formats of balance sheet. The balance sheet formats would vary in terms of how exactly the items are placed. Okay, the format of balance sheet would vary as to how the items are placed within the balance sheet. So in that note, something very important that you have to remember is this: the accounting. So there are two formats. So the placement of the items within the balance sheet, that is called as grouping and marshalling. The placement of the items within the balance sheet, that is referred to as the grouping and marshalling. So there are two main formats. One is called as the order of permanence and the other is called as order of liquidity. Okay, so now we will be studying the most commonly used format of the balance sheet, and it starts off with capital. Okay, so it starts off with capital. Then you have all your long-term liabilities. So what are long-term liabilities? Obligations beyond 1 year, they are referred to as long-term liabilities. Then you have your short-term liabilities. Short-term liabilities, the other term for this is current liabilities. Okay, the other term for short-term liabilities is current liability. Then we have our, then we have on the asset side, you start off with fixed assets. Fixed assets are those resources which are likely to be with the business for a long period of time. Then you have investments. Then investments are basically excess money that the business had. They have invested it somewhere. Then you have your current assets. Current assets are resources that are available with the business for a short period of time. So this is typically a format, in brief, a format of the balance sheet. On the liability side, you have capital, long-term liability, short-term liability. On the asset side, you have fixed assets, investments, and then you have current assets. So this is how we go about with the preparation of the balance sheet.